Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha Darad, and joining my colleague Yatin Mota. Well, Yatin, it was the final day of the trading week and it was a happy markets today, all throughout the day, and some relief definitely after yesterday's fall. But coming to the headline levels, Sensex up about 760 points and Nifty also cruised above that 24,850 mark. So a broad-based buying was seen across the sectors except your Nifty Pharma index, which was dragged down by Sun Pharma's tepid FY26 guidance. So we'll talk about more on that later in the show as well. But good participation came in from the mid-cap and small caps also. And there was the exuberance that we were hoping to see today despite what the tepid US markets were exhibiting in today in the overnight session. But yes, Yatin, positive market today. But for the week, we did decline by 0.5% or so on the headline index level.
Absolutely, and as you mentioned correctly, it was a happy Friday, and after yesterday's losses, we probably recovered almost everything. In fact, we are now comfortably above that 24,800 mark. When it comes to the mid-cap end of the markets, looking quite buoyant because the advanced decline ratio was better than 2:1. Mid-cap indices gaining between 1 to 0.5% sorts. What did well is stocks which reacted to the numbers as well as news. I list out the stocks, but clearly the reactions to the earnings were quite sharp in today's trading session, and most of the sectors that we are talking about ended with the gains, especially the financial services stocks as well as the FMCG stocks.
That's right. Let's take a look at some of the top gainers and losers at this point of time. On the Nifty 50 front, top gainer continues to be your Eternal with about 3.7% uptick. Yesterday, we did see that the stock saw some selling pressure, and today it's seeing a good rebound with about 3.5% gains. Other than that, HDFC Life, Geo Financial with about 2 to 3% gains. Power Grid also reacting well with about 2.5% gains. ITC reacting well to its Q4 results, where brokerages have largely remained bullish on the counter, and that stock has given about 2% gains as well. On the other hand, only two losers on the Nifty 50, Sun Pharma and Grasim. Sun Pharma definitely, we'll talk more about the stock, but yes, it was the management's tepid guidance and the US revenue which did weigh on the sentiment, and that's why you can see a cut of about 2% on the Sun Pharma index as well, Sun Pharma as well. But coming to the broader end of the markets, that did see good participation. Small caps and mid caps, both of them gained about 0.4% each as well. Yatin, why don't you take us through some of the top movers and shakers there?
Yeah. So in the mid cap space, Honasa, despite a weak set of earnings, the stock moved 20% higher in trade after the management has moved to non-natural products, more into the beauty segment, and introducing newer cosmetics. When it comes to investor presentation. What was also doing well is TBO Technologies, Emcure Pharma, both of these stocks up 10% post earnings. Vari Energies, this is one stock which makes solar panels, and after President Trump's administration has put funding on hold for several of these clean energy projects, there are nervousness spread across green stocks across the globe, especially Vari here because they have a plant in the US recently commissioned. That stock was down 8%. Gravita post a few block deals, was down 5% in trade. Aegis Logistics, Raymond's and Kaplan Point Labs were the other stocks where there was profit taking. But BSC, remember that stock went ex bonus, 2 bonus shares for 1 held. So the price gets adjusted to 1/3, and post the adjustment the stock was up 5%. Despite the nervousness yesterday, the stock managed to recover in trade today. Stocks like HDFC Life, beg your pardon, and Max Financials were the other stocks in the insurance space which did really well, and both stocks up 3-4% with hitting multi-year highs.
All right, that's coming in from the broader markets. But let's take a look at some of the stocks that did gain limelight today. Definitely that was your ITC, top Nifty gainer with about 2% gains, and the stock did see a good reaction following its Q4 results. The positives were in the frontline numbers, good profit growth despite exceptional gains that we saw. Revenue also saw good rise, and the cigarette volumes did meet with this what the street was estimating. However, the negatives were the FMCG revenue performance, which was below what the street was estimating, and margin contraction in the FMCG due to palm cost inflation. Even the paperboard segment, that saw downtick in profit due to higher cost pressures. Now, the street is quite bullish on the counter, and that's what cheered the stock in today's trading session also. We did see that Goldman gave a buy call on the counter, shared a target price of about 490 rupees per share. Now, what they believe is that the cigarette business did see margin strain, but they expect cost pressures to ease going ahead. Nuvama also retained a buy call on the counter and said that since palm oil prices have started to correct, so FY26 could see some benefits from here on. On the other hand, HSBC liked the stock due to its inexpensive valuation at the current levels. Yet then we did see that this cigarette volume saw a steady growth this quarter, but competition from Godfrey Phillips has been rising because they have been steadily increasing market share in recent quarters. So that could wane on the sentiment going ahead.
Well, market share gains are there definitely for, few of these brands, especially Marlboro. But if you talk about ITC, there was no price growth, when it comes to the tobacco business and the cigarettes business. And more importantly, like other FMCG companies, their foods and, the FMCG business, which is a non-cigarette business, also saw a margin collapse for the quarter. So numbers for ITC were mixed. However, brokerages do believe, Lovisha, that the valuations are compelling versus other large cap FMCG companies, and hence none of them have seen a meaningful revision on the target price to the downside.
That's right. Let's take another stock in focus. While we were talking about ITC as top gainer, this was your top loser. That was your Sun Pharma, and that weighed in on Nifty Pharma Index also, giving out the only sole sectoral loser in today's trading session. Now, the stock did come under pressure due to lower US revenue, and the management gave out a very tepid FY26 growth outlook. If we go through the Q4 numbers, India's formulation business, that revenue grew in double digits, and the company continued to maintain its market leadership. But in the US, revenue fell by about 2.5% due to generics pressure. Headline figures also reflect the same, revenue up about 8%, but profit down about 19% also. Now, what the street is saying and what the brokerages are saying, Nomura has given out a sell call on the counter, and they said that the FY26 sales guidance was below what they were estimating. The management's guidance for mid to high single digit growth was there, but the street was working with at least 10% of the revenue guidance. And the second thing is that the company plans to invest about $100 million in FY26 to support the launch of its dermatology and oncology drug. And what the brokerages believe is that the rising overhead spends could hurt the margins going ahead as well. Yet then the stock didn't do well, and now with more expenses, when the company's US business is struggling, Street is worried about their margins going ahead, and that's why we saw the pressure in today's trading session also.
Yes, I think their guidance of $100 million of additional cost in FY26, which would mean that the extra expenses will be 800 crores per annum, 200 crores per quarter. Clearly impacting margins. And if you look at the guidance on the revenue front also, they are expecting single digit sales growth versus the market expectations of mid-teens. So didn't do well, and clearly today's reaction was also quite muted.
That's right. But coming to the star performer of the day, that was your Honasa Consumer, because that stock rose about 20% after the management gave out a pretty strong guidance for FY26. Now, if you look at the Q4 results, it was broadly mixed. Revenue was up, but the profit was down. Operationally too, the company saw a little bit of setback. But the five major categories of Mamaearth, the face wash, shampoo, sunscreen, moisturizer and baby care products, that rebounded to double-digit growth. Now, since all of these categories contribute to about 70% to the brand sales, the management is aiming to increase it to about 85 to 90% over the next 2 to 3 years. Even their retail footprint saw a good expansion, and the management plans to add another 50,000 direct outlets in FY26 as well. What the brokerages are saying, they're a little divided on the company. On one hand, the company's strong guidance is something that they're appreciating, but the sustenance of the growth is something that they are very cautious about. For instance, ICICI has shared a buy call on the counter and said that the company is starting FY26 on a good note, but MK Global has shared a sell call on the counter saying that they are awaiting a sustained growth recovery to turn positive on the stock. Yet then we saw how the stock fell after the second quarter performance, and the management also said that it was the bottom of their performance that they have reached, and things will improve from here on. But the sustenance, that is something is what is keeping brokerages cautious going ahead.
Yes, I think Honasa, there has been volatility in earnings, volatility in their overall inventory level. I think these are the typical stocks wherein the expectation was for high growth and a sustainable growth. It didn't work well. And yes, post the IPO, we have seen more pain coming in for the company. But yes, the management has able to convince investors about a better outlook for FY26, and hence the stock was up 20%. But what was not doing well in today's marketplace were many stocks. In fact, there were various stocks which had a negative reaction to their overall earnings. And one of the stocks I want to discuss is Ramco Cements. Now, in the cement pack, we had most of the large cap cement companies improving their EBITDA on a sequential basis. So quarter on quarter, be it Ambuja, be it ACC, be it Ultratech, all of them have seen improvement in their EBITDA margins. But Ramco Cements clearly struggling to maintain their margins. In fact, Ramco Cement believes that the kind of environment is there currently. Price hike has been something which they are looking at in the southern markets. Obviously, the question is whether or not the recent 30-35 rupees per 50 kg cement bag, that kind of price hike sustains in the marketplace and further hikes are possible. So, Ramco Cement is now believing that there is a chance that numbers could look improved in Q1 of FY26 because of better realizations. But when it comes to the Q4 numbers, clearly disappointing. However, Nomura has a buy call on the stock with a target of 1060. Nomura believes that miss was on account of weaker than expected volumes and realization growth. However, if you look at the overall outlook, that has been improving on the margin space, and hence after opening gap down, the stock recovered somewhat. When it comes to the net debt, that has increased significantly. But if you look at the debt EBITDA, that has improved because of the profitability improving. So, on an overall basis, Q4 was muted, but cement companies, whether or not they perform in FY26 is a question with good margin sustenance.
That's right. Even there was a Nuvama report that came out earlier and which said that, the price hikes that they have taken for the month of May, that is also looking quite positive, and the volumes could pick up from the second quarter, from the first quarter of FY26 itself. So, yes, cement stocks, that is something that we need to watch out for. But for this week, we did register losses, a little bit of a consolidation that we saw compared to what last week presented. But we'll watch out how the next week is going to pan out. But with that, we've come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. Thank you for watching. Do have a good weekend.